It's now time to bring you our first feature on the show today as we look at inflationary pressures Nigeria is dealing with. In the month of February this year, Nigerian inflation hit a new high as food prices jumped more than 20%, heaping financial pressure on households amid slow economic growth. Driven largely by the impact of the coronavirus pandemic, that has also induced a drop in price of oil and weakened the naira. Inflation reached 17.33%. Now, the year-on-year rate of inflation continues to reflect the grim economic reality of Nigeria as we saw a further uptick in the headline index as well as in the food and core categories. Most of the drivers that supported and sustained the inflationary pressure last year have also still persisted in the new year as the country is facing decline in food supply, increase in energy prices, a COVID-19 induced strain on healthcare sector, and an exchange rate dilemma. These factors, however, have pushed up the cost of production, worsened the cost of transportation, caused medical services to be luxuriously priced, and also left food prices on a northward trajectory. Well, as the economy returns to a growth pattern, albeit marginally, in the final quarter of last year, with GDP expanding about 0.1% year-on-year, the economy and other experts say price pressures are further expected to increase in the coming months, going by the current economic and social challenges bedeviling the country, Nigeria. To discuss this feature now and much more, I have joining me via Zoom the Chief Executive Officer of the CFG Advisory, Tilewa Adebajo. Good to have you on the show this afternoon.
Good afternoon. How are you?
Very well, thank you. Thank you very much for joining us. Now, let's start off with the notion there seems to be no end in sight in terms of the current inflationary pressures we are dealing with. As at the last count, we were at about 17.33%. Do you think we are moving closer to the 18% threshold? And this is largely fueled by food price index. What do you make of the next forecast we'll be having as the NBS releases its reports later on Thursday?
Well, it is clear that the trajectory on inflation is high and upwards, and we have a situation in Nigeria where inflation is spiraling. And the key driver to that is food inflation. Food inflation has crossed the 20% threshold, and it's putting more pressure on inflation. And clearly, the direction is upwards. And even from the projections of the central bank and the IMF and World Bank, we're looking to see that not only are we going to cross the high of 18%, which we peaked on about 5 years ago, it seems that this might hit 20% by year end if we do not apply the brakes.
Well, looking at the United States as well, also recording a consumer price index also rising faster than expected in the month of March. Now, when do you think we're likely going to see a plateau in terms of the upward movement we've seen in terms of the spikes so far recorded? For some analysts, the initial forecast was at about the third or fourth quarter. Now you're saying year end. When do you think we might likely see a plateau in this figure?
Well, it's very difficult to say at the moment because we have some challenges with food inflation. And if you understand the fact that the Central Bank of Nigeria has spent over 1.5 trillion in terms of intervention in the agricultural sector, in terms of the backward integration programs they're trying to support, we still haven't seen the impact on reducing cost of food inflation. And as you know, the key driver of inflation in Nigeria is not a demand pull, which is the normal too much money chasing too few goods, but we have a cost push inflation in Nigeria, which is driven by the insecurity in the northwest of Nigeria and other parts of Nigeria now, because that traditionally is a food basket. So because of the insecurity in those areas, we're not able to get the food supplies into the major cities. And that is really where we have that problem. Again, utility prices, electricity, and fuel prices are also going up. And these are the cost push drivers of inflation in Nigeria. And that is really what we need to address. If we cannot address those issues, what we're going to do is we're going to continue to see a rise in inflation, unfortunately.
And like you rightly mentioned, the food crisis is one of the biggest challenges we have in Nigeria, looking at also the cost of energy as well, skyrocketing, but at sub-national levels now. What sort of intervention, coordination do you expect within the regional sects? Now, not having states work as silos and then coming back to strategic coordination and then stimulants from the federal government, fiscal and then monetary authorities. What do you think we can be doing much more as little entities and then the bigger central body, the federal government?
Well, unfortunately, the other problem we have is that we have a fiscal problem in the sense that we have a situation where our external debt has tripled in 4 years from about 10 billion to 33 billion US dollars. Domestic debt had also gone up within the last 4 years, and our debt stock is now at 85 billion US dollars. And if we're not careful, it's fast approaching $100 billion. Now, clearly, this is not sustainable. And the reason why it's not sustainable is that 85 to 90% of our revenues are going towards debt service. Now, this is a big problem. In terms of the central bank has reached its limits, even exceeded its limits in terms of helping the government to finance this deficit. The government itself is in violation of the Fiscal Responsibility Act, a fact which the president alluded to when he submitted his last budget speech. So we have a crisis on the fiscal side in Nigeria today. And what is even worse is the fact that because of this fiscal crisis, Nigeria is in a situation now of stagflation. And stagflation is worse than any recession, despite the fact that we've just narrowly come out of recession. Our economy over the last 5 years has not been growing at the rate of our population growth of 3.5%. So you have a situation whereby the best growth we've seen in the last 5 years is 2.7%. And the last 5 years, we've seen 2 recessions. So we're in a difficult situation and our population is fast becoming a liability. That is why we have over 100 million Nigerians in poverty and we've been declared the poverty capital of the world. Stagflation is a situation whereby you have runaway inflation, very weak economic growth, and of course you have rising unemployment. So at the youth level, unemployment is about over 55%. Now, this is a situation that is very, very alarming. And what the government needs to do right away is to focus not only on monetary policy, you have to focus on fiscal policy, you have to focus on trade policy and investment policy. You need to take a look at those 4 policies. You need to restructure. There needs to be a serious structural adjustments on those 4 pillars. And we need to see a new definition and direction on the economy that should be led at the presidency to be able to get us out of this mess. It is not rocket science. If we put in the right policies, the Nigerian economy is very resilient. If we put in the right policies, we sustain them, we can get out of this crisis.
Do you think at any point in time we might aggressively pursue the agenda of cost-cutting measures, right from leadership, government, pricing of our utilities and a whole lot more? Because that's the model that's been applied across board looking at advanced climes, but it's quite difficult for us to replicate that. We don't necessarily have enough of resource base and investment to be able to drive such a move.
Yes, we're getting there. We have no choice. At the judiciary, at the legislative side, and also at the executive side, we need to cut the cost of governance. The Oronsoye report has been circulating for quite a while. I think it's important that the government updates this report and tries to implement it because it's important that we reduce the size of governance. The government has been financing its deficit for the last 5 years. Through ways and means, and this is clearly not sustainable. If the financing of the deficits was going towards investments, they would have been positive. But unfortunately, for the last 5 years, the government has been borrowing just to pay salaries. And this in itself is where the problem. So you've hit the nail on the head. And I think there's this issue of right-sizing not only the executive, but also the legislative arm of government and the judiciary. We need to right size and we need to face the current realities that is facing Nigeria. Otherwise, we'll run into trouble further down the line.
Let's now contextualize matters at this point in time. Looking at the size of the 2020 budget, you've also made mention of our borrowings and debt level at this point in time. But still looking at the CBN, our monetary authorities, still taking as much as possible just to ensure that even if we are not having the best foot forward in terms of fiscal policies and measures within that regard, we still have stronger monetary policy coming into bear. But do you think now with the current inflationary figures we are having, this might likely force the hand of the MPC to reconsider resuming its tightening cycle?
Well, unfortunately, the monetary policy has reached its limit in Nigeria today. If you take a look at the last MPC, the central bank has done a lot of intervention. They have cut the rates to stimulate growth, which is very positive. Interest rates are at record low levels to be able to get stimulus for economic growth. And so they've reached the growth. So the issues and the inflation is, like I said, is cost push. It's not something that the central bank or the monetary policy can control anymore. You have to focus now on the fiscal side, and you have to take a look at the structural reform of the Nigerian economy to correct the problems of rising food prices, rising utility prices, both at the fuel prices and electricity prices. You need to impact that on the economy so the economy can absorb these costs or these increases and we can get back to normal. So what is important now is more of a structural adjustment of the economy. The central bank and monetary policy has already reached its limits. The challenge now is with the fiscal side, which is with the government and the executive. They need to cut their coat according to their size, and we need to see significant structural reforms to get stimulus back into the economy. Because using 90% of your debt to service your loan is no longer sustainable. The debt levels in Nigeria today are no longer sustainable.
It is quite easy now to blame the growth trajectory we are having in the country, our debt level, the crisis situation on the COVID-19 pandemic. That is still one of the biggest challenges we are facing at this point in time. But what mistakes do you think we are making now, irrespective of any sort of recovery or vaccine deployment or stimulants? What sort of mistakes do you think we've made in 2020 that you think we're making right now that you think will stifle the growth trajectory or the pattern that we'll see come by the end of this year, at least, to say?
Well, let us be factual. The COVID-19, the shutdown, yes, put the economy into a recession. We understand that, and the economy has opened up again, and we've seen the growth, and we can know that at least the COVID effect has been neutralized, and we're back where we were pre-COVID. And that is where you need to take a look at the problem. The Nigerian economy has not grown more than 2.7% for the last 5 years, and that is where the problem is. Our population has been growing at about 3.5%. So in the same period, our GDP has reduced from 580 billion now to about 350 billion. So if you take a look at the GDP of Nigeria, which is 350 billion right now, government's budget is only $35 billion. So government is a very significant and insignificant part of the output. But because of the policies and the regulatory impact of government is stifling growth. So what we need to do now is the fact that Nigeria's output is 350 billion. Government is only 35 billion, but it's choking the rest of the economy. Remittances from abroad is close to $30 billion now also, what we're getting from the diaspora. So if you take a look at government's role in the economy as a whole, in terms of output, it's quite insignificant compared to the 35 billion government spends every year into the Nigerian economy. So government needs to be cognizant of this fact. And now you need to get more private sector involvement in government, because government cannot do everything. You need to start looking at privatizations, you need to start looking at concessions, and you need to create an enabling environment, first of all, for local direct investments. The people who have been here in Nigeria before, You need to get them to start expanding their factories, expanding their businesses and their services. When you do this, you will now attract the foreigners and see that there's an opportunity. So government needs to create that enabling business environment to be able to get the desired funds. You can do it through concessions and also through privatizations. The airports, for instance, airports should be run by concessions. Government will make more money. The airports can be generating close to $3 to $4 billion a year, but we're not reaching that potential. And these are the low-hanging fruits that government needs to take into account. The roads, the railways. You built the Abuja-Kaduna Railway. What is the generated capacity of that railway line? Most people that use that service are buying tickets on the black market. Why should that be? Somebody is making a profit. Government should capture this money and use it to service that. So these are the sort of models that government needs to do to bring in private sector participation, because government can no longer do it alone.
Definitely, government cannot do it alone by itself. But now let's talk about inflation and then the power of the naira in hand. At the end of the day, these are both inseparable. But with the naira having lost most of its value, how now do you think we can resuscitate the naira and make it a worthy tender in this picture you've painted?
That is a very good question. And one of the challenges we have with the naira is not really inflation per se, because at the time when Nigerian economy was growing at 9% and 8.5% per annum, inflation rate was about 11, 12%. So the relationship between GDP growth and inflation in Nigeria, historically, if you track it over the last 10 years, you see that if you manage the economy properly, you can deal with some level of inflation above double digits. But the exchange rate management is really where the problem is. As you know, the World Bank is not releasing some of the money that they want to borrow us because we have not been able to put in place a dynamic, transparent, and, like I said, market-driven foreign exchange mechanism. So one of the conditions the World Bank has set for us is that we need to put in a transparent single window, not multiple window foreign exchange rate regime. Now, when you do that, then it helps in Nigeria. Our exchange rate mechanisms has been flawed, in my own opinion. It's static. When oil prices were at $100 a barrel, naira should have been at its lowest values, that the exchange rates would have been better than the dollars. So at that point in time, you're getting a better rate. So when the oil prices fall, then you can see that the naira will depreciate. But what tends to happen is that when oil prices recover and go up, the naira doesn't appreciate. And that is where we have been cheating ourselves all these years. Because if oil prices go up, then the naira should appreciate in value. If they go down, then it should depreciate. But it always appreciates. If you take a look at what has happened in the last 4 or 5 years, the naira has devalued by 180%. Now, it's not done anywhere. It's poor management of the foreign exchange system. So just as the World Bank has advised, if we go into a market-driven, transparent, single window foreign exchange management system, we wouldn't have a problem. And as I said earlier, $30 billion is coming in from the diaspora every year. Nigeria's budget is only $35 billion. Our GDP is $350 billion. So if the 30 billion from the diaspora is not going into the parallel market or the black market and it's coming through the banking system, then you will have a dynamic market-driven system and we can see a lower level of naira. That is my own submission. It's not rocket science. It's market-driven management.
And if all of these are missing, especially the mix that you've just made mention of, do you think that by the end of the year 2021, we'll be able to say we've met the projection of about 2.5%, 2% thereabout GDP growth? Do you think we can achieve any of that, or we are just largely optimistic and hoping for the best, or you share the sentiment of cautious optimism, or you're just like, at the end of the day, the table has been turned to our direction. We just have to play it right or have nothing to call a win?
Let me say this without reservation. Nigeria does not need 2.5% growth. I can't sit down here today with a population of 180 million people and we're talking about 2.5%
Well,
growth
that's
in
just
this
the
economy.
conservative projection. We can't
No,
really push more
I'm
than
saying
that.
that, yes, it is a conservative projection. What I'm trying to tell you that we should never be making those projections in Nigeria. The minimum growth we should be aiming for in Nigeria is 5 to 6.5% growth. That is the standard we should set for ourselves. So what we need to do as a nation and economic leadership is to put in the right policies that will achieve that growth for us.
Okay.
And it's doable. So what I'm saying is the fact that if we sit down here today and our population is growing at 3.5%, and you are talking about 2.5% economic growth
It makes
next
no
year,
economic sense.
then we're talking about more poverty. So what I want us to do is to sit down and put together dynamic policies, look at the structural restructuring of the Nigerian economy, and let's drive 6.5% growth. Nigeria has the capacity, Nigeria has the potential. I believe in the dynamism of this economy. It is resolute, and I think that we can do it. If we put the right policies in place, put the right people to drive the economy, we can get it done. I'm confident.
Well, it's no rocket science. We can't continue to follow the orthodox policy tools that we have and expect a different result. Thank you very much for your time on the show this afternoon, Mr. Tilewa Adebajo, the CFG advisory representative. It's good to have you on the show this afternoon. Many thanks once again.
Good afternoon, and thank you very much.